I'm going to be basically explaining to you what you need to look for when you are investing in stocks. So, obviously, investing is something that gets a lot of people confused. They don't know where to start, all this kind of thing. This video is not really going to be that type of video, but what this will basically be explaining, what I'll explain in this video is how to look for the right stocks to invest in. Now, usually, stock screeners is how people find companies to invest in. I'll probably make a separate video covering that. But in this video, I'm just going to show you how to look at a company. So once you do find the company, like for example, lots of people know Nvidia. I've got an Nvidia GPU in my PC, for example, right now. But essentially, once you have your stock, you want to analyze it on multiple different cornerstones. So I actually have my own page on Nvidia, which I personally invest in. So essentially, you do want to understand what the company's about, just on a surface level at very least. So, Nvidia, have multiple different segments to their company. They're mainly a technology company. They've got different revenue streams, particularly with their data centers, gaming, and also they do operate in healthcare as well with their GPUs. So they're a big player in AI, essentially. If you want to understand the company more intricately, you could read articles about them. I've got some that I've kind of taken from Seeking Alpha to explain them a little bit, different avenues of their business. But once you kind of at least understand the basics of the business and what sector they operate in, essentially you want to make sure that they're a good investment. Because just because the company, what the company does, doesn't mean that, they're a good investment. Not everything the company does is going to be successful. Many companies aren't successful, So the way that you identify the success of the company is you need to look at their long-term history and also their near-term history as well. One thing that, is important to look at, is look at this company's stock price, for example, okay? So you've got Nvidia. So it's good to look at them from the 1 year, 5 year, and max perspective. So in the year, they've grown 200%. In 5 years, they've grown 1,800%, which is easily like among the best in the whole stock market. And then all time, they've grown 200,000%, which is insane. So basically, it's to say, okay, if you were one of those smart people or lucky people, because honestly, it's very rare that people will cop a company when they're a penny stock and they grow on to be this massive enterprise like Nvidia has. It's also when they trade at these ranges as well, usually there's quite low liquidity, so there's not really the opportunity to buy shares a lot of the time in the first place, and they may not even be on the stock exchange. They may actually, you might actually have to be an accredited investor to even get Nvidia, because this could have been pre-IPO, I can't even remember, but when you've got this type of growth, it's just suggesting like, you could have turned like 100 into millions if you had held on for 2 decades, which obviously sets you for life, doesn't it? So that's why it shows how important investing is. But essentially, you can see, obviously, once you've got that kind of stock price appreciation, you'll see, if you look at their statistics and their market cap, it's also going to appreciate as well. The market cap basically coincides with the stock price movement. That's how it really works. So just get this. So they're the third biggest company in the world as well. It's worth pointing out. So they're only behind Microsoft and Apple, but it's quite likely that they're going to surpass Apple this year. So, but we'll see what happens. So then you want to kind of look at some other metrics surrounding Nvidia. So you want to look at their revenue, net income. So you can see obviously they make 60 billion in revenue, which obviously makes them one of the top tech companies in terms of revenue. Net income is nearly 30 billion, so they've got quite high margins, which is good. That translates to roughly 49% margin, I think. Yeah. And then the EPS, which is important in calculating their PE ratio, you look at. They pay dividends, but it's not very significant. Analysts consider them a strong buy. They've also got price targets. Some I find that the price targets on this site tend to be outdated though, so I'd be cautious about that. But yeah, so essentially the PE ratio of Nvidia is 74 times. So this basically suggests that if you buy a share of Nvidia today, it's going to be 70 times, you're going to be paying 70 times their earnings for the current stock price. The forward PE suggests, if you pay for Nvidia today, you're paying 38 times their expected earnings for next year. So you want to kind of see that their forward PE is in line with their growth rate percent. So their growth rate, we'll check that in the forecast section. So we can see here that their growth rate seems to be kind of erratic. Analysts, there are not many analysts for the 2027, 2028, so you might take that with a grain of salt, but just based on 2024, 25, 2026, I think they'll weigh this based on all five, but just based on the analyst predictions, their average growth rate is expected to be 23% for their earnings per share, 21% with the revenue. Now, 23% is lower than their forward PE, but it is worth pointing out that that's for 5 years. This is just the forward PE just represents 1 year. So I'd say obviously you can be a lot more in depth and calculated with your calculations on this, but I'd say it's pretty fair to pay a slight premium for Nvidia with a lower average expected growth rate than their forward PE, just because they constantly beat their expectations, I believe. So if we go to Seeking Alpha and we go to Nvidia, there's a section that goes into how often they beat their earnings. They have 43 upwards revisions in the past 90 days. They always beat their earnings pretty much since well, actually they've only shown 4 here, but there might be an article or this. Let's see. They've beaten, in the last 2 years, they've beaten their earnings 8 times, revenue 7 times. So basically they consistently beat their earnings. So even the analyst expectations. So basically when you combine the fact that the analysts are always providing upwards revisions to Nvidia, and then Nvidia still beats the upwards revisions, it goes to show that they're consistently growing. So they are a good investment in this field. Essentially, they're a high growing company. You do have to pay quite a lot in terms of stock price valuation for them, but when you compare it to their growth rates, it comes somewhat fair. Obviously, I don't think for the next 20 years Nvidia is going to have high growth rates, but just in the 5 to 7 year term, you could potentially expect that. So when you look at that, you want to look at their PE ratio, forward PE, and look at the expected growth rate, and also their past growth rate is also worth looking at as well. You can see here their past growth rate has shown signs of decline, but then massive increase afterwards. So, for example, 2019, 1.13 EPS. Now all of a sudden in 2023 they have 11.93. That's 10 times increase. So that's the type of thing that you want to look for. In 5 years, they've increased their EPS by 10 times. So there's that. Okay. Now, of course, you want to look at, their financials. You can see revenues growing very high. So is their net income, EPS. Obviously, there are down years, but they make it up for increased growth in the years that would follow. Positive margins. You want to see their margins are improving essentially over a long-term period. You want to look at their cash. Is the cash increasing? Is the debt decreasing? We can see that they've got increasing debt overall, but they've got more cash than debt, which is a good thing. It suggests that, okay, if Nvidia wanted to pay off all their debt with their existing cash, they can. And also they've even got receivables as well, which are obviously which can be converted to cash, I believe, within a 90-day period. So more than enough cash to cover their debts. You might want to look into whatever buyback program they've got. So we can see here, Nvidia are spending money on share buybacks as of the last 2 years, which is good. They've got enough cash to do buybacks. So when the shares outstanding decrease, that basically is good for the value of the stock on the stock market. Now they're not really aggressive with the buybacks. The percentages aren't huge, so really it's mostly going to be just the growth of the company in general that's going to contribute to the stock price appreciation, not the EPS. In contrast to a company like Apple, for example, which you can see here, they're more aggressive with their buybacks. You can see that their buyback percentages, have crossed 3%, and in previous years 5% and higher. So yeah, and then some other things, just make sure that they've got a good quick ratio, and current ratio just means that they've got enough short-term assets to cover short-term liabilities. Or current assets and current liabilities. Quick ratio is just to do with the most liquid assets compared to the current liabilities. And then let's see, return on equity is extremely high, which is very good. That's what you want to see, a return on capital as well. So you can see that Nvidia, just off of looking at their financials, are an efficient company, and the only thing that really would turn you off from buying them is the valuation. But obviously, as you can see with this data, they support a high valuation because they constantly perform. So that's how you look at it. Nvidia are a good investment simply because they beat analyst expectations, they're at a high growth rate, they don't have a whole lot of debt, and they're just a juggernaut company in general. And it's, is there a company that can threaten their competitive advantage? Only AMD, and AMD are much smaller in size compared to Nvidia. So there you go.